G'day guys, tonight we are talking falling house prices and I'm going to bust open some fake news that's going around at the moment. On top of that, I'm also going to let you know about how you can come and see me live and actually see me live in your city. All right, so let's get into it. Tonight we're answering a question. The question that we've got that's come in from Jason George is, will falling house prices in major capital cities, will that impact the infinite wealth investment strategies? All right, so a couple of things I want to bust open here. Let's talk about these falling prices in major capital cities. Firstly, you should know that 9 out of the 14 property markets in Australia are actually increasing at the moment, okay? Don't get caught up in all this Melbourne and Sydney, media sandstorm that's happening at the moment. Really, the only major cities where we're seeing price falls is actually Melbourne and Sydney. Okay, now, of course, we've seen some, unbelievably sensationalist media pieces over the last couple of weeks. I think 60 Minutes did one of the most irresponsible pieces of journalism I've ever seen in my entire life, claiming that house prices are going to fall by 40%. You got to keep in mind, guys, when it comes to this stuff, it's total clickbait. All they're trying to do is get you on their site, is get you watching, so they can boost the amount that they can charge their advertisers. You want to pay attention to what probably two of the most respected financial analysts in Australia have said, and that's if we talk about Terry Ryder, if we talk about Noel Whittaker, they say if you want to be serious in investing, then you got to stop reading newspapers, okay? Probably one of the best pieces of advice that I've ever been given, and something that I closely follow. Base your decisions, base what you're going to do on the research and facts and data, not general narratives out in the media. You've got to keep in mind that more than 66% of households in Australia are owned, okay? So whenever there's something that's coming up about property, whether it's interest rates, okay, it's big news, and you're always going to see a lot of sensationalism around them. Let's just put in perspective some of those claims, okay? Firstly, never once in the history of the world has house prices fallen 40% in 1 year. I'm not just talking about Australia, I'm talking about anywhere in the world, okay? In fact, typically what we see in the downturns is around about 12% off the peak, okay? So that's off the peak in total. That's not in a year. That's not a 12% per annum drop. That's 12% off the peak. This coupled, and really this is exactly what Melbourne and Sydney are moving into. Okay, you've got to keep in mind that over the last 10 years, what we've seen is Sydney increase in price by 105%. That means it's doubled over the last 10 years. Melbourne has increased by 95%. So really to see an overheated market, I mean, keep in mind this is why APRA are putting all those restrictions in place around interest-only loans, investor lending, that kind of stuff. That's why we're seeing Melbourne and Sydney interest downturn. It's entirely exactly where it's meant to be in the cycle. Okay, so keep that in mind. So that's just talking about these major cities and the fake news that we're seeing going around about the price falls. You will see some downturn. Sydney is well and truly in its downturn now. In fact, it's probably nearing the bottom. You might see another, and when I say bottom, keep in mind I'm being a little bit general there, guys. You probably might see another 12 to 18 months worth of declines. Hey guys, thanks a lot. Make sure if you can hear me, by the way, have had some people say they weren't sure if they could hear me or see properly. Maybe just click the like button a couple of times just so I know you guys can see and hear me properly, okay? Melbourne is really just entering its downturn, probably got a few more years to go on that. Like for many of you, because I know a lot of our followers in Perth, you guys have come through your downturn now. We're certainly in the recovery phase. We had a 4-year downturn there. That's probably exactly what we can see happening in Sydney and what's coming from Melbourne. Okay, now in terms of that, let's put it on in the context of the infinite wealth strategies. Yeah, thanks a lot for the like there, guys. So one of keep in mind that what we're teaching people is long-term investment strategies. These are the most successful strategies that people can implement. Okay, so these long-term strategies have got to take into consideration the cycles that happens in market. We normally see around about a complete cycle. Normally, you typically 18 to 20 year period, probably see the cycle turn around about twice during that period of time, okay? Now, the smartest way, considering that you're going to be looking at investing over the long term, is that you've got to make sure that you're building in sufficient buffers and safety nets to allow for the turnings of these cycles. So one of the things that we always make sure is built into every single one of the strategies that we implement for our clients is these buffers and safety nets. And we do it a couple of ways. So firstly, one of the ways that we do it is the interest rates that we're basing that people are going to be paying. Now currently, for most new loans, you're typically seeing around about sorry, one of my notifications has just come up. You're typically seeing around about 4% interest rates, pretty standard for new loans at the moment. Our standard strategies are based on 8% interest rates, so you're talking 16 interest rate moves, and that's not even our worst case scenarios. Our worst case scenarios would see another 4 interest rate moves on top of that for 9%. The other thing that we base our strategies on is conservative rents, and then the vacancy rates is also where we build in significant buffers as well. So a standard strategy should be built on you're talking a 3-week vacancy every single year. Now already that is significantly higher than what you would expect in any investment strategy, but that's not even where we base our standards. We go through from there to worst case scenarios where we're basing it up to 2-month vacancies on all investment properties in the strategy. So we're typically looking at around about 6 times the vacancy rates that you can expect on an investment strategy right there. Areas where we build in safety nets for the investment strategies. On top of that, most of our clients will also have buffers in place to allow them to get through. Now keep in mind that even when you're basing these strategies in place, as an example, the holding cost of an investment property, the average for our clients is around about $50 a week. We would never ever put a client that could only afford $50 a week into one of those strategies. Typically those clients will be able to afford, the average is normally $200 to $250 a week. So while their investment strategy is unfolding, what's also happening is they're significantly reducing their debt levels, which goes into building significant buffers as well. So based on the buffers and the safety nets that are built into all infinite wealth strategies, it allows for the turnings in the cycle. And even for the clients that we do have located, primarily we don't have really any clients located in Sydney. Sydney is not a capital city that I would necessarily recommend to invest in. Even our clients that we do have investment properties in Melbourne as part of their overall strategy, which probably involves them having properties in other areas of the country as well, there will be no significant impact on their investment strategy because of the safety nets and buffers that are put in place. In fact, those strategies are well and truly within, or those circumstances are well and truly inside the parameters of their strategy. So Jason, I hope that gives you a much clearer picture on the impact that might have on our clients or people that are using those infinite wealth strategies in investing in those cities that are falling. Keep in mind those downturns are only going to be short. Once again, for those of you, and I was talking about how you can find out about seeing me live, all right? So I've got a couple of events. I'm going to be flying around the country next week, doing a couple of live events in Perth on Tuesday, the 30th of October. I'm going to be at Perth Convention and Exhibition Centre. I'm glad to see you guys or you're happy to see me coming over that way. We've got an event there that'll be running between 6:30 to 9:30. I'll have a link in the post, so if you want to attend those events, if you want to get a couple of tickets to come along, click on those links, register for the details. In Melbourne, I'm going to be in Melbourne on Wednesday, the 31st of October. That'll be at the Crown Complex there. I think it's in the Crown Promenade, which is just opposite Crown Towers. 6:30 till 9:30. Once again, if you want to get a couple of tickets, just click the link in the post above, secure your tickets, and I'd love to see you live and in the flesh, guys. Jason, I hope that answers your question. Guys, thanks for tuning into the Facebook Live. And stay tuned. Make sure you select to see our notifications first so that you can be notified when you get or when I'm doing a live video. Thanks a lot, guys. Thanks for all the loves, the likes, the happies, and all that kind of stuff. Look forward to seeing you guys soon, and have a great night.